All right, congratulations, you have a job that qualifies you for a 401k. So if you are wondering what a 401k is and how it can benefit you, this video is going to be 401k for dummies, or the basics of a 401k plan and what you need to know. All right, so first things first, a 401k plan is not a pension plan, and that's the biggest thing that you need to recognize. And now the reason it's not a pension plan is because a pension plan is when an employer promises an employee a certain amount of retirement income in the future. Now, a 401k plan, the employer promises to contribute into a 401k plan, or at least have a plan available for you to contribute into, but then you pull from that money and they are not promising you a certain amount of money when you retire. Now, pension plans are pretty much a way of the past. You may still have some pension plans in government entities, but all of the private sector is pretty much moving to a 401k plan, and that's because they are going to reduce their risk as a company, and so they're just shifting that risk to you, which isn't necessarily all bad because you can still go and have a great retirement when you contribute into a 401k plan consistently. All right, the 401k plan is a tax deferred plan. That means any money that you put in right now is not taxed right now, but you are going to wait until you pull that money out at retirement and then you are taxed on it. And I love this because I'm all about saving money right now. So if you contribute into a 401k plan, you are saving money right now because it is reducing your tax liability at the end of the year. And I like saving money on taxes as much as I like people smashing the like button on this video. So for a quick example, if you make $50,000 in a year, but you contribute $5,000 into a 401k plan, the IRS is going to look at you and say, you only made $45,000 this year, and that's what you are taxed on. Okay, when your employer has a 401k plan, what they will do is they will withhold money from your paycheck at the rate that you determine, and then they will take that money and contribute into an investment account for you. So you are the owner of this account, and you can decide which investments you are going to invest in within that account. Your investment choices depends on which brokerage your company is using for the 401k plan, but you can log in online and see which options you have and be able to choose which investments you want to go into. Now, if that sounds daunting, then usually they have like a tool like Charles Schwab or Fidelity, Transamerica. They'll usually have like an investment tool, and they can kind of tell you where you should put some of your investments. And there are also mutual funds out there with a target date of retirement, and you can just invest in those, and those funds will actually shift over time. As you near retirement, they will take your investment from high risk to lower risk so that you can maintain the principal balance on it when you are about to retire. Like all good tax breaks, the IRS likes to limit how much you can do. And so for 2021, the limit on a contribution that you personally can make into a 401k plan is $19,500. However, if you are above the age of 50, you can actually contribute an additional $6,500 into your 401k plan. There's overall limits, so you personally can contribute $19,500, but your employer, if they match, your overall limit is actually $58,000. Now it's $64,500 if you are over 50. Now that overall limit is actually really useful if you are a small business owner, because you can essentially pay yourself $58,000 in tax-free money if you contribute into a 401k plan. Now, if you aren't the owner of the business, then you're subject to whatever the business is willing to contribute into your 401k plan. And they do this a lot by matching. So they'll say, I will match a certain percentage of what you put in. Now, I'm going to tell you this right now. If your employer offers a match, please contribute enough money into your 401k plan to get the entire match. Otherwise, you are just throwing free money away. Matching calculations are usually worded a little bit funny, so if you have any questions about your matching calculation, please hit me up in the comment section. I'd love to answer them for you. I'm going to give a few examples of how I have seen them done in the past. I actually used to audit 401k plans, so I saw a lot of different calculations on how employers match their employee contributions. So for example, they will say the employer will match 50% of anything that the employee puts into up to 2.5% of the employee's gross wages. So to break that down, if an employee put 2% in, then the employer would match half of that, so they would put in 1%. Now, to get the full 2.5% of gross wages, that means an employee would have to put in 5%, and the employer would match the 2.5%. And so that's how you would maximize the match in that situation. Thanks for watching. If you're new to the channel, consider subscribing. If you have any questions on 401k plans, please hit me up in the comment section. I would love to answer them for you.